Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, good morning. Welcome to Chartbusters. Well, this is a show where we highlight all the buzzing stocks of the day. For the time being, we're holding with some mild gains, and we'll also get you a couple of managements because it's earnings season. I'm Nigel D'Souza, and with me, Mangalam Malu. Hey, Mangalam.
Hi, Nigel. Absolutely. You know, we're holding up in mild greens. 11,400 is the mark where we are right now. Actually,
Okay, all right. I think Mangalam's got a bit of an audio issue with him right now, but the market's holding in the green. Batley is holding at around the 11,400 odd mark. Ashok Leyland, that's the stock you should really look at. We had the management clarifying that, in fact, they don't see a big impact in terms of, this entire axle load norms that we have been talking about for the recent past. And all these stocks are moving higher. You have stocks like Shriram Transport that have moved higher. A couple of these axle companies like in automotive axles, you have a JNA axles. So it's a party. All these stocks that corrected, on the back of these axle norms, they were a little jittery. All of them have bounced back in today's trading session as well. But first up, Mangalam, I think you're back.
Yes, I'm back and all mic'd up. First up, all the top stories that we're tracking this morning. Hindalco, that one gains in trade on the back of strong set of results from Novelis. First quarter net sales increased by about 16% on an year-on-year basis.
And multiplex stocks are in focus ahead of the Bombay High Court hearing on the PIL to allow outside food into cinema halls. Currently, they are hoping that there is some relief. Both those two stocks, PVR and INOX, holding higher.
INOX Wind, on the other hand, reacts to a good set of numbers coming in. The reaction is positive. The numbers are above estimates. Edelweiss, however, growth comes in weaker than earlier quarters, which is why that stock is lower by about 5%. Adani Enterprises, too, reports a top-line miss due to low coal trading volumes. That stock lower, further accelerated by the fact that it entered the F&O ban.
And Patel Engineering, that rockets in trade. The company bagged new orders worth around 2,400 crore rupees. Stock holding with gains of more than 13% on very high volumes.
And in key earnings to watch today, oil marketing companies are expected to report a weak quarter on the back of weak macros. From the pharmaceutical pack, Lupin expected to report flat performance, while for Cipla, a steady quarter is likely, which is likely to be led by the US and India growth on a low base.
Okay, all right. How do you trade the Nifty from here? We're holding mildly in the green, but more importantly, any kind of dip actually is getting bought into. So what's the trade on the Nifty? Ashwini Gujral joins in. Ashwini, good morning. What's the trade on the Nifty?
See, the PSU banks have come back. So the bank Nifty is getting ready for a big breakout on the upside. And obviously, Nifty would likely follow. But the way the banks have recovered from the lows and now consolidating at the high of the day, I think very soon PSU banks should move on the upside and take the bank Nifty with them. Overall, now your stop is 11,380 on the Nifty futures, and similarly today's lows on the bank Nifty futures. So my sense is that as we go into the second half, the market gets stronger and tries to build up strength, because today lots of large cap financials are doing very well since the morning. Plus you have HDFC Bank, which is trying to move up. So, retail and corporate both firing in the same direction often makes for a good cocktail on the upside. Having said that, SBI is a buy with a stop of 300, target of 321. Canara Bank is a buy with a stop of 288, target of 302. And Ashok Leyland is a buy with a stop of 118, target of 132.
Right, Ashwini, you spoke about the cocktail, and United Spirits is actually on the move, which is at the high point of the day. But my question has something to do with the tire space. We have Ashok Leyland that moved from the low point of the day, but all the tire stocks, the likes of CEAT, Balkrishna Industries, they've moved higher as well. And along with that, we have a battery company, Exide, that one's moved higher from the low point of the day too. So anything from that space that you like, tire space or perhaps Exide, which has moved higher?
See, all of these have been moving up even yesterday and for the last couple of days. I think CEAT is getting back towards its 200-day moving average, 1580 thereabouts. Exide had a very good day. So overall, this ancillary space is doing extremely well.
On our radar is HIL at a record high. The stock has moved fairly well in the from this year itself. It has gained currently at the low point of the day, some profit taking perhaps after a strong set of the first quarter numbers. We have Mr. Dhirup Roy Chaudhary, who's the MD and CEO of the company, joins us on the phone line. Thanks a lot, Mr. Chaudhary, for joining in. We see some sharp performance coming in both your roofing solutions as well as the building solutions business. So let's talk about the bigger part of your business right now, which is the roofing solutions. In that, if you could break up this sort of growth that we've seen of about 2% on the revenue, 58% on the EBITDA, in terms of volumes for both the asbestos and the non-asbestos part of it. And secondly, if you could also tell us the capacity utilization that there is in the roofing business.
Thank you very much for having me on this call. Yes, quarter one has been one of the best quarters ever in the history of HIL. And the growth that we have made on the roofing segment on quantity is 8% against the same quarter last year. And on our revenue base, we have done 14% growth. And for the building solutions, we are posting good numbers once again. So 12% growth for the blocks and 294% growth on the dry mix.
You said roofing business volumes grew by about 8% quantity, right?
Correct.
Could you break that up in terms of asbestos volume growth and non-asbestos volume growth?
So it's primarily all asbestos in the roofing, yes. So 296 to 77 was the number for quarter previous to that is Q1 for the year 18, and 321,446 is the number for this quarter.
All right. What about the building solutions business, Mr. Chaudhary? I remember the last time you joined in, you were telling us that you expect to scale up that side of the business. How is the pipes division doing? What was the total revenue did in last year? And this year, how has the start been?
So the pipes is really pulling up very well, courtesy the brand improvement that we have done towards both HIL and the rest of it. And Nigel, I'm very happy to say that the CSK bit that we did for ATL and BTL in association with such a strong team supported this direction. Plumbing business has grown by 181% on revenue. And we definitely see this momentum picking up further because we are investing a lot on this particular business. And the Golan factory, which we were to come up last time we had talked about it, is already up and running, and 95% already has been filled up.
True.
So,
yeah, Mr. Chaudhary, I missed that number on your pipes division. What is it currently? And also concrete blocks, what was the revenue number and what was it in the previous year, if you could tell us, so we get a sense of what kind of revenues we can look at for FY19 in both these two divisions.
Superb. So on a revenue scale, plumbing business in quarter one 2000 for the year 18 was 9 crores, which has grown to 25.3 crores this quarter, which is a growth of 181%.
Okay.
And so far as the building solutions is concerned, we are posting a good sales number of 85.2. From 85.2 crore last year, quarter one, to 116.5, which is 37% growth in revenue. And the trajectory is very well there. The tractions are pulling up. I think this would be a good year for HIL, and the quarter to follow also should be pretty good.
Mr. Chaudhary, I'm looking at your other expenses. They've grown by about 57% this quarter at around that 140 crore mark. This compares with around 90 crores. How much of this would you attribute it to the tie-up that you had with Chennai Super Kings? And going forward, this 100 plus crore per quarter is something that the street should look at?
So we have intentionally made an investment on the marketing expenses, more to pull up the HIL brand as well as our sub-brands, which is Charminar and Birla Aircon.
How much was that as a percentage of sales in the previous year, and how much is it this year? What is the run rate likely to be?
So I think the growth in marketing expense will not be more than 1% more than last year on a revenue terms. And we have charged out most of the expenses already in Q1.
What was it last year, sir?
So the exact number is not with me on the marketing expense, but 1% on revenue is the additional bit that we are planning to spend.
So 100 basis points could be the hit on the margins.
Okay, all right. Mr. Chaudhary, let's keep it simple then. Last year you did a double-digit growth, but this year, the start of the year has been very, very good. So what kind of a revenue growth can you do for this year? And the first quarter's performance has been super. Can you maintain these kind of margins, or what would be a realistic margin picture that we should be looking at?
Thank you very much again for the compliments. Yes, quarter one this year has been exemplary, and I give full credit to our employees and the dealers who have worked with us and the customers who have been with us for many years. We have actually focused on profitable growth, and that was the theme that HIL has been always driving. 23% growth on revenue, 40% growth on PBT, and 41% growth on PAT has been the number posted. Quarter one is always the best quarter for HIL because quarter one is the season for the roofing segment, and the season drops down once the rains set in, and once again picks up towards the quarter three, quarter four of the year. So we would not be witnessing a similar percentage growth in the coming quarters, but we would definitely maintain a very good trajectory over last year's performance. So the growth comparative over last year versus this year, I think you can expect very good results from HIL.
Mr. Chaudhary, before we let you go, the last question from my end is, what is your capacity utilization in the building solutions business? I think I missed that number. Any expansions planned in that in terms of the building solutions, pipes, as well as the building solutions business, the concrete blocks?
So on the AAC block, our capacity utilization is almost 95% at the moment. We are expanding on the total solution base, and that's exactly what we are driving. So, the likes of putty and ready mix and all the rest of it is doing very well to get that solution across to the customers. We are definitely pumping up that part of it, and new capex would be set up to the extent of 40 crores towards enhancing our solution sales for the building products. On the pipes front, we are again at almost 75-80% utilization of the capacity for all the three UPVC, CPVC, and SWR, and we are therefore now taking steps to ramp it up further. So the new CPVC and UPVC facility is coming up in Golan and should get live this month, and we are also targeting another new capex to be put up in Timapur near Hyderabad for CPVC, UPVC, column pipe, and SWR.
Okay, all right, Mr. Chaudhary, thanks so much, sir, for joining in. We'll be looking forward to the closure of that acquisition as well, the overseas acquisition that you had made earlier this year. Well, we have City Union Bank's numbers that are flashing for you on the screen. The NI number looks more or less in line with what the street was working with. 385 crores, I think Abhishek's poll was. It's coming at around 375 crores, so that's pretty good going in. The net profit number bang in line with the poll, and in fact the asset quality as well on a sequential basis, it appears that it's been maintained. Gross NPA is up for you on the screen. The net NPA is as well unchanged. So these numbers look more or less flattish, and not getting any disappointment seems to be the name of the game, and that's why in fact I think the stock has jumped up.
Absolutely, and provisions also have come down sequentially and year on year. But with that, we'll move on to a mega CNBC TV18 exclusive. CNBC TV18 Shireen Khan traveled to the Bill and Melinda Gates Foundation to catch up with Bill Gates, the co-founder of Microsoft, as well as co-chairman of the Gates Foundation. Listen in to his views coming in on the ongoing global trade war.
We're in the midst of tariffs and retaliatory tariffs, with the US imposing tariffs, China responding, the EU is in on it as well, including India. How do you see the global economy today as we look at political leaders who are perhaps looking more inwards than outwards? What is the impact likely to be on global trade?
Well, the global economy actually is doing quite well right now. The estimates have actually been pushed up a little bit. U.S. growth, China growth, India growth. And those are, it's rare that those are all going fairly well. Certainly these trade issues are scary in that if you get people turning inwards, raising up tariffs, the global economy is not going to do as well. There's huge benefits to trade. Take if one country is growing too much of a crop, the fact that you can, send it, say, to Africa where it's needed. Otherwise, when you get a bumper crop, then you get a price collapse because you don't have that global demand. And so agriculture's been an area where a number of countries, including India, had to think, okay, how willing are they to be a part of that global trading system?
So, we're not in the midst of a full-blown trade war just yet. What do you believe is likely to be the tipping point?
Well, I don't have a crystal ball on this, but the rhetoric that, okay, we'll use trade tariffs and we'll force somebody to do something, that can escalate. And so, we could end up with a lot of tariffs and all the plans people have made about assuming their global supply chains will work and that they're able to do exports and imports, that alone will be quite a burden on economic growth and therefore for job creation. And in all of these things, you always have to say, okay, the poorest countries, they're the ones who are just barely getting by. And so it's always interesting to think, how do we avoid them suffering? Even Indian farmers want, their crops to be exportable.
Stocks in the broader markets. HEG, I remember yesterday the stock was down nearly around 10% intraday. It appeared someone wanted to get out, but take a look at the stock today. If you bought it at yesterday's lows, you would be making, whopping 12-13%. Yesterday in the final hour of trade, there was some selling that was seen. Today, that stock has rebounded and rebounded very, very strongly. One was wondering whether fundamentally anything changed. But I made a few calls actually to some of the executives at HEG, and they said that no, nothing's really changed. So it appeared there was some routine profit booking, and that stock has surged up. Yesterday's low was around 3,750 odd. But let's go to our next guest. We have Thomas Cook, who's the next company in focus to discuss how was the past quarter. We have Mr. Madhavan Menon, the group chairman and MD of the company. Hi, Mr. Menon. Thanks so much, sir, for joining in. Well, I'm looking at a travel business. You have a growth of around 36% odd. If you could split it up for us, how much was the organic? How much of it was inorganic?
Yeah, okay. So, Mangalam, good morning. Before I start, let me just step back and make a couple of points around our profitability. If you look at the consolidated numbers, they're honestly not comparable, simply because we have deconsolidated Quess, and we now treat Quess as an associate, and only a fraction reflecting our ownership in Quess appears. So, in the true sense of the word, the travel businesses are beginning to reflect value on a standalone basis rather than being overshadowed by what Quess does. If you look at on a comparable basis, our revenues on a consolidated number has grown by 9%. This is on the back of strong retail demand that we have seen in the travel businesses, especially if you look at Thomas Cook, the standalone Thomas Cook, which you referred to. Our profit before tax has grown by 36%. Now, this is on the back of strong revenue generation as well as better cost management. Now, if you get down, again, drill down further, you look at the bookings that we've witnessed. The leisure business is up 14% from a year ago. The billings on our prepaid card has grown by 18% from a year ago. And the forward bookings on the leisure business, which I think is a very important number, it currently stands at 31% over last year. So the forward bookings looks at the forward, going forward in the in the current quarter, as well as the other numbers look at the previous quarter.
So does that mean, Mr. Menon,
that both our online business,
you will do 31% revenue growth at least in this fiscal, given your forward bookings have grown by about 31%?
No. So, Mangalam, no, that's not necessarily, but I'm just saying the strength of our retail demand is reflected by our forward bookings. I just want to add one more point that contributed to this growth was that both our domestic business and our online business, which are what we've been incubating over the last couple of years, actually turned profitable on the back of good demand as well as the seasonal demand that we witness. So I expect that both these businesses will actually start contributing to the profitability of the company.
All right, you're talking about profitability. Give us a trajectory of profitability for Sterling Holidays. When does it turn profitable?
Okay, So in reality, if you look at Sterling's numbers, they have turned, they are profitable in the last quarter. However, I must mention here that there have been some accounting standard changes that were put into effect in the last quarter. As you're aware, Ind AS 1515 was introduced, and we actually had to take down a write down in our revenues, which were then deferred across the life of the project of the product. So you now have in one quarter you see a dip in profitability, but in reality, as we go forward, you're going to see the profitability improve. I believe Sterling has turned the corner. It will continue to register profits as we go forward.
All right, and finally, what's the debt on your books right now? You have undertaken some debt repayment, so what's the total debt on your books?
So Thomas Cook by itself has reduced its debt by 193 crores, and over the next 2 quarters we will completely remove all leverage. I mean all the debt off our books. We will go to entirely negative working capital on the back of
what's the number, sir?
What's the number
that we
Mr.
gained
Menon?
on the OFS. We are reducing.
Yeah, Mr. Menon, we are just running a little tight on time.
Yeah.
If you could just help us out, what is the debt number? What do you plan to reduce it down to?
So the debt number is below 100 crores. That will drop to about 37 crores, and which will then disappear by the year end.
Right. Thanks a lot, Mr. Menon, for joining in. Wish you good luck for the remainder of this year. As we wrap up the show, just keep an eye out on Adani Enterprises. That one's recovered nearly 8% from the low point of the day. In F&O band, the results were below estimates, but the stock has recovered from the low point, currently in the green as we speak. With that, we end Chartbusters. Stay tuned to CNBC TV.